This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Joining us today is a special guest. We have Rick Rule, the chairman and founder of Sprott Global Resources Investment Ltd., a part of Sprott Asset Management. It's great to have you on the show today, Rick.
Always a pleasure. Thank you for the opportunity.
In the markets this week at gold and silver, we've seen some consolidation after the big move last week in both gold and silver. Silver really consolidating after the early move in the week up over 21. Hasn't been able to extend past 21, and we've seen a pretty tight range with silver moving up actually on the COMEX Open daily, about 20 to 30 cent spikes on the COMEX Open, and then consolidations throughout daily COMEX session, and then we've seen slight sell-offs in the overnight, the Globex session, and then the Asian markets. And in gold, pretty much the same picture, consolidation after the big week last week, but gold has held the 1300 level, tested it on Thursday, and actually didn't even get back to 13. I think the bottom was about 1305. I know you're just back from a safari in Africa, Rick, but what's your take here on gold and silver, the trading this week after the big moves last week?
Well, I think these consolidations are natural, and normal backing and filling operations. I was actually surprised it took so long for gold and silver to test to the upside, which they did last week. But the move we saw last week, the up moves on decent volume, were, I think, pretty bullish, and we would have to expect some form of backing and filling. But I think both gold and silver, and by extension platinum and palladium, are acting fairly well in the market. People had expected a fairly soft summer, I think, from gold and silver. I think that sort of shows the underlying strength in the physical market. It's odd looking at the market reaction and then looking at the news and the forecasts of the prognosticators for gold and silver. Everybody's talking about lower prices following on the themes that existed over the last 3 months. And of course, gold and silver rewarded everybody by going up as opposed to down. When everybody expected it to go up after the action last week, of course it backed and filled. But I think the market's quite strong. I think the underlying physical strength in the market says something about the ultimate prevalence of the physical markets over the futures markets, which has been the story over the last 3 years.
Now, I know when we spoke to Eric Sprott a couple of weeks ago, he's still looking for a big second half 2014. Is that what you see as well, Rick? Are we going to see a decent move here off the lows that we've seen really over the past 6 months of, about 1180 in gold and 18 to 1850 in silver?
Eric has more courage than I in terms of telling you when. I certainly always respond by saying, if you gave me the choice, which the market does, between owning gold or silver or owning the U.S. 10-year Treasury, which would seem to be the anti-gold or the anti-silver, I would prefer to own gold and silver. Last week, more people agreed with me than disagreed, and of course, the metal was up. Eric has done extremely well over time by understanding something about the direction of markets. My own work is to relative value. I think we get to the same place. I think gold and silver is going higher, although I can't tell you when.
Now, one other question I had for you, Rick, here. You've really, over the last couple of years, been strongly advocating the white metals other than silver, platinum and palladium. Particularly palladium here has been really strong over the last 6 months, trading today just shy of 850. Are you still a buyer of platinum and palladium here, or are you looking to maybe play on those moves and allocate or move some of that allocation over into something like gold or silver?
No, I like all of the precious metals, but I'm much more inclined to platinum and palladium than I am to gold and silver because I like the fundamentals of the platinum and palladium business. If you look at the gold business, one of the difficulties that you have with gold is, and I'm not saying this is a bad thing necessarily, but one of the things that happens with gold is that you have so much supply to consider, so much has to be considered in terms of investor intention with regards to above ground inventories. With regards to silver, the supply side question is different. That has to do with how much silver is going to get produced as an adjunct to other mine production like base metals. But with platinum and palladium, less than 1 year's fabrication demand is available from existing above ground inventories owned by investors or others, so the supply considerations that you have are less onerous. Further, with platinum and palladium, on a global basis, the industry doesn't earn its cost of production, which means that the above ground inventories will inevitably fall at this price point. So my favorite of the precious metals is platinum and palladium. That isn't to discourage people from buying gold or silver. I buy gold and silver on a consistent basis, but I like platinum and palladium better.
On a related question, I'd love to ask you this, since you just returned from South Africa. What is your assessment about the mining conditions there for platinum and just the whole social fabric and how that relates to...
It's quite sad. It's quite sad. The place is a real mess. You will see that the platinum and palladium strike has been settled, and there's really a conundrum in South Africa. The workers are right in that they aren't making enough money. The industry has to raise workers' wages, but the industry can't raise workers' wages because the industry does not earn its cost of capital. Marginal shafts, and by marginal shafts I mean as much as 35% of South African production, is going to have to be shut in because it doesn't make money at this price point, much less at higher wages. So the national mine workers and the AMCU will ultimately get higher wages, but they'll do it at the price of probably 35 or 40,000 jobs, which will cut South African production by about 30%. Which will, of course, cut overall supply by 30% or 70%, or by 20%. The prices are going higher. They may not be going higher next month or the month after, but they are going higher. The second thing to consider is, of course, now that the price is settled, South Africa barely had enough power to get through this summer without the mines being in production. With the mines being back in production, Eskom is going to face more demand for electricity than it has electricity. The political consideration in South Africa says that you shut in the industrial producer before you shut in the residential producer. So the first people to get shut down will be the mines, which is going to be problematic. Finally, in South Africa, there's consensus among all social groups that the rents from mining, that is, taxes and royalties, have to go up, but they can't go up because the industry doesn't earn its cost of production. This is a truly ugly set of circumstances. It's pretty obvious to me that supply will fall, and the consequence of that, in the face of very strong demand for auto catalysts, is that platinum and palladium prices will, over the next year or two, go higher, probably much higher.
To ask about another commodity resource, Rick, you've long advocated to investors the merits of investing in water. But as you know pretty much better than anyone, it's not an easy sector for the average retail investor to get into. Has Sprott considered moving beyond its agriculture fund and establishing a fund strictly focused on water-related investments?
Yes, we are looking at doing a deal with an existing water-related manager, and our hope is that we will be able to consummate a transaction in that regard this calendar year. Certainly, I myself have been investing in water rights personally for about 25 years, but as you point out, it is very, very difficult for most retail investors. Water will be the story of the next 2 or 3 years, well, the story of the next 10 years for that matter. But having waited as long as we have, it's pretty obvious that it'll be interesting over the next 2 or 3 years because the demand for water goes on unabated, but the supply is really in question now.
Over the years, I've had the pleasure of listening to your interviews with other folk. You frequently have talked about your view on manipulation as being one where you're not 100% sure that you can always point to the finger of when manipulation's happening, whether it's happening, the degree and magnitude thereof. Now that we're all a few years older and this bull market has waxed and waned and it seems to be moving more forward, and again as well at this point, and with the manipulation that's overt and acknowledged in all the other sectors, with bond manipulation being the king of it. What's your sense as to how much manipulation happens in the gold and silver market, Rick? I'd love to know. Like, for example, would you think that it happens at least once a week on a concerted basis that has a material impact on the markets?
I don't know that it happens once a week, but certainly the LIBOR market has shown that all markets can and will be manipulated. So the idea that the gold markets aren't manipulated, or the idea that on occasion the general security markets aren't manipulated, is naive. I mean, that's just not the way things work. People who have the ability to game markets for their own gain will, of course, do it. The idea that there's been a thoroughgoing manipulation is another question, and people who are interested in that question would be well advised to going to the GATA website, which has reams and reams and reams of documentation with regards to their allegations associated with manipulation. I would say, of course, that in 2010 and 2011, the precious metals markets were also manipulated up. That'll happen from time to time. The idea that markets aren't manipulated, as I say, is, it's just silly. It's completely silly. The idea, as an example, that, and you've seen this on occasion, that very large sellers of physical precious metals came into the market at a point in time when the market had absolutely no volume and sold large amounts of metals. that wasn't designed to maximize proceeds to the seller. It was designed to have an impact on metals prices, and it did have an impact on metals prices. I would also tell you, however, that in my experience in 30 years in these markets, I've seen a lot of manipulation of a lot of markets, and the markets always win.
What we're seeing in the platinum and palladium market is a pretty decent example of that too. The cost of production not being carried by companies.
Sure.
So switching gears a little bit, there's a lot of speculation about the longer-term reserve status of the U.S. dollar and how that impacts the bond market and financial markets in general, and in particular gold and silver. Some, including Jim Rickards, believe that the transition of one form or another, possibly to an SDR-based system, basket system for trading, is going to happen within the next 3 years. What do you think when you've looked at this question? What kind of scenarios do you imagine in the intermediate term and beyond?
Well, certainly what I hope happens is that the market continues to develop freely. My hope is that buyers and sellers transact in a variety of fashions which suit themselves. For my purposes, I like to hearken back to J.P. Morgan's statement that gold and silver are money, and everything else is credit. And how, as an example, India and China propose to settle transactions between themselves is their business, not mine. But I would point out that if you had a shift of sort of 1% or 1.5% of assets from U.S. dollar-denominated savings to gold and silver-denominated savings, you'd probably move the gold and silver price circa 100%. So the idea that gold and silver have to be the means of settlement as opposed to a minor means of settlement regarded to other means of settlement is one that argues very much in favor of higher gold and silver prices without the complete dominance of gold and silver relative to other asset sectors.
I wanted to get back a little bit on the platinum palladium topic here, Rick. You discussed some of the fundamentals in Africa. How big of a potential factor could the whole Ukrainian and Russian crisis be? What's your take on that? Is that really a non-factor, or?
Yeah, I think that's pretty much a non-factor. I think the real issue with regards to gold and silver will be confidence or lack of confidence in the U.S. dollar. The idea, and everybody seems to forget about this, the idea that, as an example, all of the financial problems associated with the so-called global financial crisis of 2008 have been solved, I think, is silly. All the major governments are still running primary deficits. The unfunded liabilities associated with things like an aging population and social promises haven't been dealt with. Nobody denies that the interest rate has been manipulated artificially low, subsidizing spenders at the cost of savers. None of the conditions precedent to the 2008 problems have been addressed, and my suspicion is that a problem that hasn't been addressed will raise its ugly head again. The second thing is simply the inexorable deterioration of the dollar. Maybe 30 years ago, when I was a younger man, there was a motel chain called Motel 6. It was called Motel 6 because a room there cost $6. I passed a Motel 6 the other day. It was Motel 6, $69. So over 30 years, the purchasing power of the U.S. dollar has, with regards to a room at Motel 6, declined 11-fold, unless, of course, you believe that the utility of a room at Motel 6 has increased 11-fold, which I seriously doubt. Those two things, the pernicious deterioration of the dollar and the potential for sudden lurches, I think over time will erode people's confidence in the dollar and enhance people's sense that they need to be involved with at least some portion of their financial assets in an asset like gold or silver that isn't simultaneously somebody else's liability. I think that's much more important than the Russian situation or the Ukrainian situation. I think that gold goes up on any kind of fear. I think that the Ukrainian situation and the general Russian disposition enhances people's fear, but I think those fears are misguided relative to the other fears that people should have about the political economy associated with the world's reserve currency, the U.S. dollar.
And certainly this week, we had another report that kind of adds to what you're saying about the confidence of the U.S. dollar. Right now, on Friday afternoon, the USDX is trading right about 80. But the news I'm referring to is the big Gazprom deal from several weeks ago. Initially, there wasn't any announcement that they were going to drop the dollar as a trade settlement. But yesterday, Gazprom announced that they're ready to settle Chinese contracts either in yuan or rubles. So, I mean, that's a really big announcement when you're talking about, what is it, like a $300 billion deal over 30 years. I see everybody, at least in the BRICS, if not the other nations, piggybacking on this once we really see this in practice.
I think that could happen. And, I frankly think it's healthy. My own experience in frontier economies and dealing with sovereign wealth funds and state-related investors in those countries is as much as they distrust us, they distrust each other more. My own sense is that ultimately more and more of these things will clear and trade in ways that don't involve renminbi, rubles, or dollars, but increasingly clear in ways that involve gold.
There's definitely been an increase in gold trading with Iran being locked out of the SWIFT system, and
sure,
presidents with Turkey using gold for settlement and smuggling trade and all that. So,
yeah, think about what you would do in that set of circumstances.
Yeah, well,
it makes perfect sense to me.
With millions of one's citizens needing goods and services, they had to do what they had to do.
Wanted to give listeners a quick update here on the state of the physical market for gold and silver, the retail market and wholesale market in the U.S. With prices jumping up over the past week, the one item that we've really seen still in shortage over the last 6 months has finally freed up as individuals have started selling, and that's the 90% silver, which has gone from pretty much unobtainable over the first half of the year to suddenly there's prevalent supplies and premiums are dropping really for all the 90% products, whether they're silver dollars, dimes and quarters, halves, which is, like I said, really the only product that's remained in shortage over the 6 months, whereas finally, all the U.S. mint products, the other government mints like the Canadian mint, those products have been readily available, especially over the last 3 months, and also the private round. So it's a good time for physical buyers. There really aren't any delays, shortages, at least in the retail physical market here in the U.S., and now that includes 90% pretty readily available. And really across the board, premiums are the lowest that we've seen probably in the past 5 years for pretty much any physical product.
Before we wrap up, that's a good segue to ask Rick, what is your views to what the institutional investor community is thinking at this point? I know earlier in the year we had pretty decent showing at conferences, and you were remarking that there was well above average interest knocking on the door of Sprott Asset Management. What's going on now? What do you see?
That's still happening. We're seeing a lot of interest. We aren't pursuing that interest as Sprott so much because we raised $1.5 billion last year, which we're busy trying to put to work this year. But certainly there's a lot of institutional interest in gold and silver assets, in physical gold and silver, and also in the debt and equity of gold and silver issuers. We see the market as being very, very, very strong. Of particular interest is, of course, the private equity interest in gold and silver, assets, which we think is a very good sign. The private equity investor has a time frame that is more appropriate, and they also have a discipline, meaning that they're willing to pay the management teams well, but they pay them after success. That I think will be very useful for the gold and silver business. I think the market's in very, very, very good shape here. I can't tell you when the rebound is going to come, but I think the rebound among the quality issuers is going to really, really, really surprise people who have had their expectations set very low by the market that we've experienced in the last 3 or 4 years.
When you compare this cycle and its ups and downs versus what you've seen previously, does it seem like the smart money of the institutional trade coming into the sector after July lows last year or so forth, or June lows I should say, does it seem like there's a greater percentage of people or more dollar flow or however one would possibly describe it this time around just because of the severity of the last 3 years?
Well, I think what's happened is that things are changing. Institutional leadership was generated 10 years ago, 12 years ago by open mutual funds, some of which were generalist funds. We don't see them as leaders. We see the leaders now being private equity people and being sovereign wealth funds, which are patient, longer-term, more disciplined investors. As a consequence of that, we don't see the rebound coming as quickly as others might, but we see it being of longer duration and much brighter.
All right, well, before we let you go, Rick, I wanted to let you give our listeners an update on the upcoming Sprott Natural Resource Conference in, I believe it's Vancouver in a couple of weeks. If I recall, you're going to be in attendance there. It's the first annual of the Sprott Natural Resource Conference. Why don't you tell our listeners a little bit about that?
Yeah, we took over the conference from Agora. It was, I think, the best high-end retail natural resources investment conference in the world, and we hope to make it the same this year. It takes place July 22nd through July 26th at the Fairmont Hotel Vancouver in downtown Vancouver. You can get information about it by going to our website, which is www.sprottglobal.com. Many of the largest and best newsletter writers associated with natural resources in the world will, of course, be speaking there. I'll be speaking there. There will be 50 companies exhibiting. There will be executives from senior mining companies. It's a conference that's 16 years old, and you don't get that kind of duration in this business, particularly in the clutches of a bear market that we're in now, if you don't give your attendees value. So we, of course, look forward to seeing as many of your listeners and readers as is possible. We think it's going to be we know it's going to be a spectacular conference because it has been for many years, and look forward to seeing as many people as possible there.
And if that's not enough, it's in Vancouver, British Columbia in July.
That's a really good point. It doesn't get any better. It's possible to have a good time in Vancouver as well as make some money at the conference. It's a wonderful city, and that's a wonderful time of year in the city.
And just a gorgeous area, probably one of my favorite areas of North America, at least in that second half of the summer.
At this time of the year, it's absolutely spectacular. It's a very good point.
All right, well, we'll wrap up the show this week here. Rick, it's great to have you on. Really appreciate the time.
Pleasure. Thank you for the opportunity. I really enjoy it.
For Eric Dubin, this is the Doc. Thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They used the word orderly. As long as it's orderly, it seems to be okay.